Hey traders, this is Christian from Hertz, Tribeca Trade Group with your midweek video. And I normally don't shoot midweek videos. I normally do a weekend one, but there is so much going on in the equity market and in the bond market, in the option market that is so exciting. Just been a huge couple days of trading that I wanted to go over some of the moves and break them down a little bit because there is a lot going on. So, one of the things that I find very interesting is the separation that we've got going on in terms of indices and sectors. So take, for example, the S&P up 25 basis points today. Not a big move, but you take a look at what happened in the small caps today. They were up 1.6%. The Qs were down just the opposite, 1.6%. So a 3.2% separation in the major indices, small caps versus Qs. This is just very unusual. Same thing going on with U.S. sectors. And, this is always important as a trader. You always want to know what type of market that you're in right now. And you could look at the JCJ index, and what does this index measure? It measures implied volatility amongst the S&P 500 components. So how the names are moving inside the S&P 500, the 500 names, if they're moving together, if they're separating. Let's take a look at this chart. This is actually a 2-year chart, and you can see that implied correlations are at a 2-year low. Obviously, we had some volatility about a week ago, and everything was moving together for a couple days, but we are now at 2-year lows, meaning stocks are moving. Some sectors are really moving to the upside, and some are really moving to the downside. To illustrate this a little bit further, just take a look at what the banks have been doing the last couple of days. So for today, for example, KRE, that's the regional banking ETF, up 4.2%. XLF, you can look at all financials, up 3.7%. Biotech, XBI, up over 3%. Retail did very well today on the back of Macy's. And who was the other name that reported? I can't remember off the top of my head, but they got a nice boost off of that. We also had a couple names like Nordstrom report after the close today, very strong. But XRT was up 2.7%. You had the insurers up 2.3%. Industrials, very strong today, up over 2% as well. Then you look at the worst performers of the day. And this is crazy. You have XLP, consumer staples, down 2.7%. All of the bond proxies, all of the names that have been doing very well when yields were going down are just getting smoked right now. So utilities down 2.4%. IYZ, that's your transport. That's your telecom ETF, another defensive group, down well over 2% today. So this chart makes exact sense to me that we are at very, very low correlations right now in the S&P because some stocks are moving up, some stocks are moving down. So who does this benefit? What type of investor does this benefit? A long short investor, somebody who's got longs on and they have shorts on. You could really be making money on both sides, obviously, as long as you pick the right side. So I talked a little bit about the bond proxies and what they're doing. This is a big focus right now in bonds, and this is the TLT. We've been talking about the TLT quite a bit in the Tribeca Trade Group room. If you look at TLT with the major moving averages, this is the 20 plus year treasuries. Here was your break of the 200-day moving average. We were all over this. We broke the 200-day moving average. We retested it, and good night after that. Another sell signal was the 50-day moving average dropping below the 100-day moving average. Check out the volume here. Just the volume confirming the breakdown here. So where are we right now? Well, after a couple huge days of price action, we've got a little bit of support back here, a little bit of a congestion zone. So I've got two trade ideas for you in this video. One is, first of all, this purple line is a 3 standard deviation Bollinger Band. Why do I have this on my charts? Because it indicates how extreme this movement is comparable to normal time. So a 3 standard deviation Bollinger Band. Bonds have gone down pretty quickly. I think they're due for a little bit of congestion. I think they very well could go lower, but usually you see a little bit of a snapback, especially in either the major equity indices or in bonds. We usually don't see this for too long. So what I did today was I took advantage of this big move, and I actually went out to December and sold some put spreads in TLT. So I went down and I sold the 120, 116 put spreads. Excuse me, that's the wrong strike. It was the December 121s I sold, and I bought the 117 strike, and I collected $1 on these. And so your risk is basically the difference in price between the two strikes minus the premium that you're collecting. And this trade will do fine as long as TLT doesn't crater further. If it comes back and snaps back a little bit, trade should work out. That's trade number one. Trade number two is I want to take advantage of the move down in the bond proxies. So a lot of attention has been being paid to utilities, to consumer staples. I think the REITs have more to go to the downside. Why do I think that? Well, two different reasons. First of all, look at the yield right now in the 10-year. It's right now it's 2.15. Notice just a couple of days ago it was about 1.8. So that's the big move. Also, the 30-year bond is now yielding almost 2.3%. So this is also a big move. Let's look at the yield on the VNQ ETF. The VNQ ETF, first of all, why did investors go into VNQ? And I'm going to talk about the investment that we've seen in the last couple of years in VNQ. But why have, which I believe, why have investors flocked there? They've probably because of the yield. It was yielding much higher than the treasuries at a 3%. But however, look at how treasuries have caught up here. So there's definite risk versus holding something that's a bond proxy versus U.S. Treasuries, which in theory, do not have are risk free essentially. So, so there's a lot more risk in holding REITs than there is in Treasury. So we could see a nice migration out of these proxies, which we've been seeing a little bit in other groups, and a move into bonds eventually to take advantage of the heightened yield. So I wanted to get into what has happened in VNQ in the last couple of years. This has been one of the biggest or widely owned areas that's been flocked into over the last couple of years. The white line on this particular chart is the investment going into VNQ. It's the outstanding shares. Notice since 2012, this is a 5-year chart, it's gone up, 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 and up. This ETF is huge. The ETF is, in terms of assets, a market cap of $30 billion. So there's $30 billion of investment of investors that have got into this. And you go back to this chart again, and this has been happening over the last 5 years. So it seems very toppy to me, considering the move in interest rates. I think it's a great chance or opportunity to short this group. It has come down, which is the green line is the price in VNQ, but I think we've got more downside ahead. So I did start a trade today. I went out a little bit further. Sometimes I only go out a couple months, but I wanted to give this trade time to work. I think there could be a lot of unwinding in this trade if rates stay where they are. So I went out to March and I bought the March 75 puts, 288. It's a lot of premium. You could turn this into a put spread if you like, but I want to give this a few months to play out. You could also do this in IYR. It's a very similar basket, underlying basket. They have a lot of shares in common. The options are a little bit more liquid in the IYR, the REIT ETF. So those are the two trades. And if you're looking to get a part, we do this type of analysis every day in the Tribeca Trade Group room. You can go to tribecatrategroup.com and check us out. Here's our subscription page, and here's our trading desk package that you can get involved in. Here's, for example, the type of entries that we do. We took a few different entries today. Look at all the exits. Just huge profits today. Just a lot of exits. GE was a big trade for us today. UNP calls were a big trade for us today. LYB calls. Just really, really nice trading going on. There's the TLT trade that I mentioned going on. But and every day you get a recap. You get all of our, you get a position sheet as well. So please check us out, tribecatrategroup.com. And thank you very much for watching tonight's video. Have a great evening.